Alright, good evening and welcome back to precisealgorithmtrading.com. It is Monday, February 12th, 2024, and let's take a look at the markets. First, we'll look at our automated trading systems, and we got a nice pop today on the Dow futures. So that new green dot right there means that that's all-time highs in our equity. This is the results of trading in this time frame. So on the weekends, I show longer time frames because we open up over a year's worth of data and just compare, really making sure that we don't get any dips that are too out of line. And so that's a new equity peak. Whoops, that's a new equity peak. This is the trades for today. So we got 3 trades, 2 winners, and a loser. And all this is based on 3 contracts. Like every one of these says 3 contracts. So, yeah, that's how these systems work. You could make them for 1 contract, or you could make them for 30 contracts. You just have to have enough of an account to be able to handle it. This is the, oops, I went out of line, NASDAQ, and we've got a pullback up today, and that's a good thing. We've had a pullback up here in the last couple days. So 2.9, well 2.8, 2.9, and 2.12 now. So that's a decent little run, and it'd be nice if we could get up here and make new equity peaks here. And then the Russell 2000, we got a new equity peak on the Russell here, and the trades for the last few days, same kind of a thing. So something you might wonder is why do we trade 3 systems? And the reason is because they have their own volatility, and they don't always trade together. So sometimes the Russell's up and the Dow's down, and or the Nasdaq's up and the other 2 are down, and they're not necessarily correlated. They sometimes act correlated, but sometimes they're totally not. And so that's why. We could do the same thing with oil and gold and some other uncorrelated assets, but these are the ones that I've built and become comfortable with. So, all right, let's dive over to Thinkorswim and look at the regular markets. So, the S&P 500 here. This is the E-mini futures, so it's the S&P 500 futures, and that's tomorrow's candle right there forming. Today's is a little, I guess that's a shooting star, but not much of one. So I'm not sure that how convincing that is. A little upper wick and a lower close. So let me zoom that back out a little bit. And over here on the hourly, I guess that would be notable. So we had an hourly close below the 30 period moving average, which is either it's forming the potential for a new buy signal if it pops back up above and stays there for an hour, or is this possibly the beginning of a move back down? We're at the upper channel over here on the daily. I'm expecting at some point to move down to the lower channel again, and then we'll see if we run into maybe this 50% line that's dashed right there, and we bounce, or is that going to be all that she wrote, and we come back up, kiss it from below, and come back down into some of this territory down here that we haven't seen in a while. So this, at some point, we should revert to the mean, and the mean of this price is at least the 30 period moving average. So it's the midpoint between really the two average true ranges that we have on here, which is pretty much right there. All right. The Russell, that broke out nicely again. So that's why sometimes these moves are just hard to get a hold of. Like if you didn't jump on the Russell when it broke above here, which I did not, I missed it, and now it's 3 days or at least 2 more days well to the upside, and we're up at this upper reversal zone because we're at the 2 ATR. Um, Not that it can't go beyond it like it did back here. It certainly can, but that breakout type of a pattern, I'm expecting us to pull back in, probably retest this this down channel, and see where it goes from there. So just because the market doesn't make anything easy on you, I'm expecting a retest just because all these bulls that got in, they can get pulled back underwater, and this thing can revert back to basically retest this breakout area. Old resistance, which would have been this line that I've got drawn in here at 100, becomes new support when you break up above it. You can see it tried to break above it here, and it acted as resistance, came back up here, and just for that wick right there, it came up and retested it from below. That was resistance again, came all the way back down, came up, and you can see we actually had a little back and forth here with these candles that have the pivots on them, and then it finally broke through. So old resistance should become new support, and we should come back to that line at some point here. So okay, that's enough of that. Let's go to the Dow here. We're still cruising higher. It looks like on the hourly chart. Doesn't look like it wants to roll over yet. I'm wondering if at some point we're going to see Dow 40,000, just because maybe we'll get a blow off top to there, and that's where everybody will start really chasing the FOMO, the fear of missing out. That's a real thing in the markets, and it's not something we're going to do. We're just going to play our signals the way that we do them. So to that point, I'm going to check something out here in a second. So this is the Nasdaq, and it continues to go higher. Although we got to close below the 30 on the hourly chart here, which basically you go back 2 pivots, and that would be the stop if you were gonna if I was positive in this trade, and I was actually trading the Nasdaq, I'd use this pivot right here to lock in my profit. So the transports look an awful lot like the Russell, which they have been lately. And what I was going to get at was, let's look at TLT. So if I'm, and my thoughts are that the bonds, I'm sorry, the stocks are going to at least stall for a while, if not pull back. Well, when you're in that situation, it's nice to look for uncorrelated assets, and TLT is a bond fund, and I've been in it for a while after it had this spike once it pulled back here, because I could set a stop underneath the recent pivots, and it hasn't stopped out yet. Not that it won't, because it could, but I mean, similar moves like this is obviously a stock, but let's just look at this. This is Chewy, a similar kind of a spike. I lived all the way through this pullback, but the stop was really where I've got it drawn there, and it still hasn't taken it out. So not that it won't, but I'm just saying these patterns tend to work out. So TLT here, if the market does pull back, TLT's got a pretty good chance of actually rising. And if not, I'll just stop out for a small loss and move on to the next trade. Gold is similar. Gold is an uncorrelated asset to the rest of the market. That doesn't mean it's always going to go opposite. It just means that if the stocks go up, then it doesn't mean gold's going to go down. It just means that they're not correlated, and vice versa. Silver, SLV, it's another one that's not correlated. Silver and gold tend to be semi-correlated to each other, but they move differently from each other sometimes quite a bit as well. Bitcoin, BITO, but this is Bitcoin strategy, whatever that means in the ETF. There are other Bitcoin stocks now, or ETFs. This ARKB is one that came out this year for Bitcoin Direct, and that's not enough candles for me to do anything with, so I'd be just gambling, and I'm not going to do that. So I use Bitcoin because it generally does follow Bitcoin, and so the fact that it's also not correlated to the stock market makes it unique and something else that I keep an eye on. As also Coin, which is Coinbase, tends to follow more like Bitcoin, although it is a stock. So not to throw too much at you, but these are other ideas for things to watch that aren't necessarily correlated to the normal stock market. And then there's SQQQ, which is the inverse of the NASDAQ. And when this actually is inverted, and when the NASDAQ goes up, this goes down, and vice versa. So if you actually start to see the pivot start to happen, and you want to get short the market, but you want to stay basically in a long asset, you can buy SQQQ and set your stops and everything else like we do with the other stuff. There's also there's others. So yeah, there's a lot of inverse ETFs that you can use. DOG, I believe, is another one. DOG. It's the Dow. It's the inverse of the Dow. So, and the same rules apply. So I'm going to leave that for the night, and we're going to go to stockcharts.com and look at the bullish percent indexes. Whoops, forgot one thing. Let's go backwards. The VIX. I wanted to follow the VIX. So here's let's put /ES on the right. So that's the S&P 500 on the right on a daily basis. There's the D. And on the left is the VIX on a daily basis. And you can see we got a pop here, back up. We're inside these Bollinger Bands. And this is a Bollinger Band crossover system that we can actually see potential for reversals. And what I'm expecting here at any given time is we're either going to bounce up here again and come back in, and this is just going to continue, or we're going to get something like this, which would be a move outside the Bollinger Bands, back in, and then we'll see where it goes. But I'm continuing to watch this for the sake of this review every day, also just for the sake of kind of watching this whole thing unfold together. And then, go back to stockcharts.com and we'll look at these. So the industrials didn't move today. The NYA went up 2.49%. The transports didn't move. The NASDAQ went up 2.47%. The S&P went up 1.19%. The OEX went up 1.56%. The NDX didn't move. So again, just hold on, wait and see, and the positions that we have on, you just have to keep riding the trend. The trend is your friend until it ends. And that's what I got for tonight. Have a great night, and we'll talk to you tomorrow.